Imagine being in a stressful trade position. You place your stop loss and TP. Before the market traverses through your TP, you get stop out. Or most of the times, you enter a trade position, the market plays around with your emotions before it finally traverses through your TP levels. In order to avoid this kind of stressful trade position, today we are focusing on entry the market at the right time. So if we are go, like, subscribe, and stick around for the full video. First, we're going to dive into entry based upon area of exhaustion in the market. Area of exhaustion in the market simply refers to points in the market where price forms several weeks or multiple weeks. Whenever price approaches this area for the first time, it will bounce back always. Let's say, for example, we have this level where price was creating several weeks, as you can see. For the first time when price tap into this level, what happened? It then bounced up. Take a look at this level where price was creating several weeks. For the first time when price tap into this area, it bounced up. Take a look at this level where we have several weeks at this point. For the first time when price tap into that level, see how the market reacted and bounced, gravitated all the way to the downside. Take a look at this level. Here we have several weeks at this point. For the first time when price tap into it, it bounced down. Also here, as you can see, when price tap into that level, it bounced down. Literally, these are points in the market where you can always take an instant entry in your risk management into consideration. Let's say, for instance, we have this level, right? Where we have several weeks at that point. You see, as price tap into that level, imagine you set your sell limit at that point and your stop loss slightly above the area of exhaustion. By considering your risk management, you see how the market then displays all the way to the downside. This is like 430 pips on gold. So basically, this is how you can benefit from trading area of what? Exhaustion in the market. Always remember, these are points where the market forms several weeks. And for the very first time, when market approaches those areas, it will always react. It will always bounce back.
Just a quick reminder, if you find this video useful, if this video is of any help to you, please like and subscribe. By so doing, it will help grow the community. Subscribe now. What are you waiting for? Just subscribe.
Next, we're going to dive into entries based on PRZ levels in the market. What are PRZ levels? These are levels on our Fibonacci retracement tool. As price approaches these levels, they tend to what? Reverse. In a downtrend, as price continues to create lower low point, higher point, lower low point, higher point, lower low point, higher point, lower low point, we always anchor our Fibonacci to the recent lower high point all the way to the recent lower low point in a downtrend. As price approaches our PRZ levels, which are 38.2% retracement, 61.8% retracement, and 78.6% retracement level, we are always expecting price to reverse at either of these PRZ levels. So remember, your PRZ levels are the one annotated in black. In order for you to take any trade entry, you have to wait as price approaches either of the PRZ level. Let's say the first PRZ level, 38.2% retracement. If you are expecting price to retrace or to reverse at that particular PRZ level, a candle must not close above it. A candle can trade through it, but it must have to what? Close below it in order for you to take the trade position. Or you have to see some sort of what? Weak rejections. Price trading through, giving you weak rejections. Weak rejections signifies what? Selling pressure. It also signifies what? Shift in market sentiment. So take a look at PRZ level 1. As price approaches 38.2% retracement level, it closes above, thereby invalidating it. The next PRZ level, 61.8% retracement, price also traded through it and closed above, thereby invalidating it. Next, we have to wait for the next PRZ level, which is what? 78.6% retracement. As you can see, as price trade into 78.6% retracement level, it traded and what? Leaving us a weak rejections, which signifies what? Selling pressure and also what? Shift in market sentiment. And later, the next candle, it closes below 61.8% retracement level. Right from there, where the candle closes, right from here, where it closes, is an entry opportunity and your stop loss slightly the previous candle which rejected 78.6% retracement level right there, and you ride it all the way to your first TP level, second TP level. Remember, negative 27 is always your first target profit taking. We also have negative 61.8%, which can be your second TP taking. Or in order for you to get an early entry, you can dive or zoom into the 5-minute time frame. In the 5-minute time frame, as price approaches our PRZ levels, we said in order for that PRZ level to hold, we don't want to see candle closing above it. If we are expecting price to retrace or to reverse at that level, 38.2% retracement level, you see how price closes above, thereby invalidating it. So the next PRZ level should be what? 61.8%. When price came for the first time, it rejected and later broke through. Immediately price broke through our 61.8% PRZ level, is no longer said to be valid. We'll wait for the next one. The next one, 78.6% PRZ level. As price traded into it, what happened? Giving us multiple weak rejections, creating area of exhaustion, which indicate what? Selling pressure and what? Shift in market sentiment. And later, price traded back into 61.8% retracement level. You see how that candle closes right there. Immediately that candle closes below 61.8% retracement level. Right there would have been your entry point. Right there. And your stop loss slightly above the previous candle. The previous candle just before the break of 61.8% retracement level. That green candle, you see the inside bar right there, and you ride it all the way to negative 27. Remember, negative 27 is always going to be your first TP. And as you can see, the market then gravitated all the way to the downside. In an uptrend, where price continues to create higher point, lower low point, higher point, lower low point, higher point, and lower low point, you always have to make sure you anchor your Fibonacci on the recent higher low point to the recent higher high point. As you can see here, we have our recent higher low point all the way to the recent higher high point at that point. So as price continues to retrace into our PRZ levels, we are expecting the reverse. On the reverse, we say the number one criteria you always have to make sure you put into consideration is, in order for you to execute any trade position on either of the PRZ level, in an uptrend, price must not close below your PRZ level. It can trade through it, giving you weak rejections, which signifies what? Buying pressure and shift in market sentiment. As price retraces into our first PRZ level, 38.2% retracement level, what happened? It traded and closed below, thereby invalidating it. The next PRZ level, 61.8% retracement level. While waiting for the next PRZ level to see the price action, and what happened? The market then rebounds back into 38.2% retracement level. You see the first candle, it closes exactly on the PRZ level. The next candle, you see how it closes. It closes above our 38.2% retracement level. Immediately that candle closes, right there would have been your entry point, right there. Or in order for you to get an early entry, you can dive into the 5-minute time frame. In the 5-minute time frame, as you can see here, for the very first time price approaches the first PRZ level here, what happened? It traded through candle closing below it, thereby invalidating it. So we wait patiently For the next PRZ level, 61.8% retracement level, for no reason, price continues to what? Bounce up again. And you see how price started closing above our 38.2% retracement level. Immediately, that price closes right back there. You can wait for the retest. On the retest, you see, is your entry point right on the retest. And also remember, for you to take trade on the retest, price must not close below rate. And as you can see, price came, tap into rate, rejected, and continue moving all the way to negative 27, as you can see. And remember, your stop loss slightly below the previous candle before the broke of our 38.2% retracement level to the upside. So in summary, as you are expecting price to retrace or to reverse at either of the PRZ levels, always make sure, number one, if you are in a downtrend, price must not close above your PRZ level. If you are in an uptrend, price must not close below your PRZ levels. 2. Weak rejections on our PRZ levels signifies what? Buying and selling pressure. Also, shift in market sentiment. Take note, it is very important.